Good afternoon, everyone. This is Christy with Ahn Co. It's Friday, January 31st. I'm going to go over the markets for the day and week with you, what a week it was for these grain markets, meat markets, and outside markets. So you had coronavirus really take over the direction of this market, scare a lot of people off and give a lot of people to kind of do some risk management and step away from the market. So you had a slide really across the board. And when you see that slide across the board for the week, you have to imagine that has to do with investments and managed money more than anything. So corn up 1 3/4 on the day. Very impressive action, not only today, but all week long. It was still down 6 cents on the week, but it really held its own against the rest of the markets, and that was impressive to see. It did not break out of its range. It's still stuck in its same range. When you have the market slide like you have for soybeans and wheat, it is nice to see corn being able to get some legs underneath it. Soybeans down 3 3/4 today. That puts them down 29.5 cents on the week. Over the last 3 weeks, beans have slid 62.5 cents on a weekly chart. That is a big break. You also got a second consecutive close below a key support level of 880 on March corn or March soybeans, and that's not pretty on a technical chart. So there are some concerns when you look at beans. We'll see how we can open back up and see if we can find some buyers in here. But we did see that second close below a key support line. Wheat market, Chicago wheat down 6 3/4, Minneapolis wheat down 2 3/4, Kansas City wheat down 5.5 on the week, anywhere from 13 to 20 cents lower on the week. So you saw that pressure there as well. Meat markets, mixed action today. For cattle, with live cattle down 40 cents, but feeders up 42.5. But on the week, you did see pressure across the board. Live cattle down over $3 on the week, feeders down almost $6 on the week. So you did see that pressure, that profit taking. Cash trade didn't slide as much. So that's one big thing to note, is that it does feel more like profit taking or risk off stance versus anything else, especially when you have the cash trade not indicating as much of a slide. Hog markets definitely had the worst week out of all the markets, with today being down over $4 on expanded limits and down over $10 on the week. That is, tied to the coronavirus, the fact that, you have those concerns about what China could do. Could we see them come into this market and buy? So that's going to be a big question moving forward. Also to note here, the Dow market over 500 points lower today off the coronavirus news. The fact that you're starting to see airlines shut down flights to China, and could see kind of China be isolated a little bit and hurt their economy just a little bit as well. I do have to close with the disclaimer: trading futures and option of all sorts of class and is not suitable for all producers. This is a solicitation. Have a great day.